For quite some time now, the exchange rate between the Ghana cedi and the US dollar has been a significant factor influencing different aspects of our economy, and the real estate sector is no exception. Now, we've seen periods of depreciation, which has impacted the cost of importing building materials, the pricing of properties, and even the overall investment climate. However, the recent trends have seen a strong appreciation in the cedi against the dollar and other currencies, but then the focus here is on the dollar. And the cedi is rising. And for once, it's not a sarcastic headline. Some may have anticipated this, but then many didn't see this coming. This is welcome news, but then what are the implications on the ground for those who are looking to buy, sell, or just invest in the real estate sector? Now, if you're someone earning in Ghana cedis and you're dreaming of owning a property, this might feel like a small break in the clouds. But then what does this really mean for the Ghanaian real estate market, especially when properties are priced in dollars? Is this the perfect time to buy, or are we just seeing a short-lived miracle? I'm Desmond Kafui, and you're welcome to episode 18 on Ghana Ground Up. Does a stronger cedi mean more buying power? Well, let's get into it. Let's first consider property prices. Now, a significant portion of building materials in Ghana, from cement additives and roofing sheets to specialized fixtures and fittings, are imported. And when the cedi weakens against the dollar, these imports become more expensive, directly translating to higher construction costs for developers. Now, these increased costs are often passed on to the buyer in the form of higher property prices. Now, with the cedi appreciating, the reverse could theoretically happen. Now, the cost of importing these materials should decrease, potentially leading to a reduction in construction costs for both ongoing projects and also future projects. Now, this in turn could lead to more affordable property prices over time for buyers. But it's crucial to manage expectations here. The impact on prices may not be immediate or drastic because there are a number of factors that come into play. We need to look at the existing inventory of properties such that there are already a number of properties on the market that were priced based on previous exchange rates and also cost of construction. And it's a no-brainer that property developers will be hesitant to reduce prices on existing stock. We also need to look at the economic factors such that the exchange rate is just one piece of the puzzle. There are other factors like inflation, interest rates, and the overall economic growth that also play significant roles when it comes to determining the prices of properties. And if the other costs of doing business remain high, then the impact of a stronger cedi on the property prices may be moderate or negligible. There's also the concept of time lag. Now, there's usually a time lag between the change in the exchange rate and also its full impact on the real estate market. It takes time for developers to procure new materials at potentially lower costs and for these savings to filter through to the final property prices. Finally, we need to understand a developer's margins. Now, developers may choose to absorb some of the reduced costs as a result of the gains of the cedi against the dollar, and they may do this to improve their profit margins rather than passing on the entire savings onto the buyers. Now, imagine a developer is building a house and a significant portion of their expenses is buying imported tiles. Let's consider the case for the cedi before it appreciated. So let's say the cedi was weak and buying those tiles for that one house will cost about 50,000 Ghana cedis. Now remember that developers will also have to cover other costs like cost of land, labor, local materials, permits, and marketing. And so let's say these costs will be about 200,000 Ghana cedis. So the total cost to build that one house is now 250,000 Ghana cedis. Remember, the cost of tiles is about 50,000 Ghana cedis to import. So to make a profit, the developer may have to probably sell that property at about 300,000 Ghana cedis, which will give him a profit margin of 50,000 Ghana cedis. Now let's look at the case for the cedi after it has appreciated, or like what we're facing at the moment. Now, because the cedi is stronger, the cost of those same imported tiles may now be probably 40,000 cedis instead of 50,000 cedis. But then the other costs like the land, labor, and all that may remain roughly about the same, maybe still at 200,000 Ghana cedis. So now the new cost to build that house is 240,000 Ghana cedis. Now here's where the developer's margin comes in. The developer may have a choice between two scenarios, and the first scenario could be the developer passing on the entire savings onto the buyer. Now if they do this, they'll end up passing on the entire 10,000 Ghana cedi saving from the cheaper tiles to the buyer, and this could reduce the price of the property from 300,000 Ghana cedis down to 290,000 Ghana cedis. So in this case, the profit margin for the developer will still be intact at 50,000 Ghana cedis, and it's the same as before, but then the buyer now benefits from a lower price. Now, the second scenario would be the developer absorbing some of the reduced costs to improve their profit margin, in the sense that instead of reducing the price of the property by the full 10,000 Ghana cedis, the developer may decide to reduce it by only maybe 5,000 Ghana cedis and will end up selling that house for 295,000 Ghana cedis. Now, the profit margin for the developer becomes 55,000 Ghana cedis instead of 50,000. Now, in this scenario, you'd see that the buyer still gets a slightly lower price than what the price was before the cedi appreciated, but then the developer also benefits from an increased profitability based on the house sold. What does this mean for you as a buyer? Well, don't automatically expect that there will be a huge drop in property prices just because the cedi has appreciated. And you may also see a slowdown in price increases or more modest reductions than the full extent of the cost savings. This enforces the importance of careful negotiation in the sense that developers may have more room to offer slight discounts now that their input costs have potentially decreased. And also, you need to focus on the overall value and also the affordability of the property rather than solely on the currency exchange rate. Essentially, the appreciation of the Ghana cedi gives developers more flexibility in their pricing strategy. They can choose to pass on the savings to attract more buyers, or increase their profits, or even find a balance between the two. That's getting more profits and also giving a better price to potential buyers. Now, understanding this dynamic helps to give you more realistic expectations as you navigate the real estate market. So what should buyers expect? Well, if the strength of the Ghana cedi doesn't fade but remains steady over time, here are a few things that we can look forward to. We can expect a potential for property prices to stabilize, especially for new projects that are yet to break ground or for projects that are in the early stages of construction. We may see some gradual price reductions, and you'd see that even though a sharp drop in prices is unlikely in the short term, we may see some gradual price adjustments over time, especially if you're paying for a property in Ghana cedis. And this may also be the case for newer projects that will end up benefiting from lower cost of imported materials. There could also be a case for increased affordability, in the sense that for buyers whose income is primarily in Ghana cedis, a stronger cedi could make the dollar-denominated properties relatively more affordable over time. And this will be true if you're building as well, especially if you will be importing a good portion of your materials. Let's analyze the basic logic. When the cedi gains good value against the dollar, the cedi equivalent of property prices in dollars will go down. Now, this means that your money stretches a bit further, or you can do more with less. Let's say a house is priced at $100,000. Now, a couple of weeks back, that house would have been worth about 1,550,000 Ghana cedis at an exchange rate of 15 cedis 50 pesos to $1. With the exchange rate dropping from 15 cedis 50 pesos to 12 cedis 50 pesos, the cost in Ghana cedis will fall from 1,550,000 Ghana cedis to 1,250,000 Ghana cedis. And that's a huge 300,000 Ghana cedi difference. And for the average buyer, that is serious money. If you convert that difference back into US dollars, that would be you enjoying about $20,000 in discounts, just that the original price of the property in dollars has not changed or will not change. This gives the impression that housing has suddenly become more affordable, and this affordability is relative, as you know that even in this price range, not many people will be able to make a down deposit on a property in this price bracket. But hold on, it's not that straightforward. Most developers in Ghana price their homes in US dollars. Why? Well, because they want to hedge against the volatility of the Ghana cedi. So when the cedi weakens, they are protected. But then what happens when the cedi gains strength against the dollar, as we're seeing now? The general theme you're likely to see is that developers are just usually very slow to adjust their prices. This means that even though in theory houses should now cost less in Ghana cedis, the actual price tags haven't changed. That is, the prices in dollars will remain the same. And over time, if the cedi remains strong against the dollar, You may see some subtle price increases that will end up clearing up any losses on the side of the developer. That's why, as a buyer, this is the time for you to negotiate. Make sure you ask the developer for updated city quotes and find out what rates they are using, and make sure they are sticking to the prevailing rates. And you have to insist on getting the current rates, and make sure that if you're paying in Ghana cedis, you are getting the cedi equivalent, or the real value in cedis, and not just some value that has been marked up using some arbitrary exchange rate. In some cases, some developers, especially those who need some quick sales, may be more flexible for now, and they may probably offer some good rates and all that. So it's up to you to use this to your advantage. Let's talk about mortgages. Now, in Ghana, most people don't qualify for mortgages, and those who end up qualifying often end up facing very steep interest rates, about 11 to 13% on the dollar and about 23 to 27% on the cedi. But with a stronger cedi, we could see a shift. Now let's look at the case for a Ghana cedi denominated mortgage. A stronger cedi increases confidence for banks to lend in the local currency, and you also see the case that the banks may also offer slightly better terms because the risk of the cedi rapidly depreciating at this current stage where we are now is low. On the side, borrowers who are earning in Ghana cedis will have a better shot at planning out their repayments without being afraid of the dollar sort of devaluing their cedis. Now, for US dollar denominated mortgages, these are riskier for the local income earners. Now, if the cedi weakens again, your repayment amount in cedi terms could skyrocket, and you'll see that a strong cedi now makes more USD mortgages look manageable, but this could change overnight. So the takeaway: if you earn in Ghana cedis, Ghana cedi denominated mortgages are safer, especially when the currency is strong, like now. But always be cautious, because a long-term mortgage needs a stable currency over many years and not just a few months. What we are seeing is just the early days, so no need to rush anything. Let's just watch and see how things unfold over time. Let's move on and look at the other side of the market. Developers who heavily rely on imported materials like tiles, lighting, sanitary ware, and other systems will be able to buy cheaper or pay less due to the stronger cedi. And this can reduce their construction costs significantly, but then here's the catch. Will they pass on these savings to the buyer? Well, in most cases, the answer is no, especially if they're targeting high-end buyers. The prices are tied to perceived value and not the cost. Now, in some cases, developers who are building for the middle-income market, or those who are trying to offload some unsold inventory, may lower their prices slightly or introduce some promotional discounts and offers here and there. So again, this is your time to make a push if you're looking to buy a property. Don't rush it though, because we're still in the early days of this appreciation, but at least be informed on what's happening in the market to position yourself to get a good deal. Will property prices drop just because the city is doing well? Not likely, at least not across board. Now, in Ghana, real estate prices rarely go down. Even when economic conditions change, developers normally prefer to wait rather than lowering their prices. After all, many developers are selling investment properties and not essentials. And by essentials, I mean properties that people are readily looking to buy to live in. But here's what can happen. New buyers may enter the market hoping to capitalize on better rates, and you also see developers who may introduce some flexible payment plans or discounts or some special deals here and there. More negotiations will happen, and buyers may win if they are prepared. So while prices of properties may not officially drop, you can get better deals now than you could a few months back. What does this mean for investors? If you're a foreign investor, or let's say a Ghanaian in the diaspora, the stronger cedi means your dollar doesn't stretch as far as it used to. And I know that this is a win for locals, but then not much of a good news for those who are sending remittances from abroad with the hopes that their little will become much. Now, if you brought in about $100,000 last month, you'd get about 1,550,000 Ghana cedis. Today, you'll be getting about 1,250,000 Ghana cedis. That's a 300,000 Ghana cedi difference, and this can influence your behavior as an investor. And as a result, some investors may end up pausing their investments and wait to see if the cedi will weaken again. Others may adjust their strategy and also target smaller projects or lower price properties. This could end up easing the competition and also allow local buyers to have some breathing room in the market. And in fact, a temporary dip in the foreign demand might also make developers more eager to sell to locals, and that's a window worth exploring for the locals. So what does all this mean for you? Well, if you're in the market to buy a property, this might be one of the best windows you've ever had in a long time. But you need to stay sharp. Don't assume that property prices have dropped. You need to ask. Don't accept the old cedi or the old exchange rates. You need to negotiate. And don't overlook mortgage options. You need to explore what the local banks are offering. And remember that this could be a temporary window. Currencies change, markets shift, and developers will also adapt. So if the opportunity is there, make a move. But then make a smart move. The recent appreciation of the Ghana cedi offers a glimmer of hope for a more stable and also a more affordable real estate market. Now, while the impact on the prices may be gradual, the overall sentiment is positive. It's time for cautious optimism and informed decision making. As always, understanding the underlying economic factors is very key to navigating the real estate market or the real estate landscape effectively. We'll continue to monitor this development and bring you the latest insights on Ghana Ground Up. That wraps it up for today's episode. Share this episode with someone who needs to hear it, and let's talk in the comments. How are you thinking about real estate now that the cedi is gaining ground? I'm Desmond Kafui, and thank you once again for sticking and staying through right to the end. I'll see you in the next episode.